Let's start off. It's the Friday before Labor Day, which is historically and typically the kickoff to the election season. We're essentially 2 months away from the election. It's going to be this is the weekend where everybody starts their traveling. The phone calls will start, so get your phone at home ready for that. And over the next 2 months, we strive toward that one day in November. The interesting part this year, not only do we have a pretty separated group of people between the one party and the other party, it's some of the widest spreads I've ever seen in my life, as far as feelings are concerned and personalities are concerned and platforms are concerned. So that's an issue. There's just some really big issues going on between the two parties. But now we have the problem of how are we going to vote? Are we going to do it in person? Is it all going to be by mail? How is the mail going to be handled? Can the post office handle it? When do the votes get counted? Do they get counted if they're postmarked by election day? Do they get counted if they're received by election day? So there's still a lot to do between now and the 1st of November. And we'll have to see how that shakes out. It's going to be an eventful couple of weeks. The one thing that did come out this morning about an hour ago, not even an hour ago, was U.S. added 1.4 million jobs in August. That's a great number. That leaves us with about 11.5 million unemployed since COVID started. But remember, that number was really, really high. So it's still not great, of course, but we have had a huge addition of jobs. We're starting to see a lot of things open up. We're going to start to see jobs come back, and that's really important. The next issue is the market. Yesterday, we saw the Dow drop 807 points. That was a big deal. That's about 2.8% of the Dow from where it started at the morning. But the NASDAQ got a bigger hit. The NASDAQ was down almost 5%. That was a pretty big chunk. NASDAQ is heavy technology. We've talked about that. The S&P 500 is down about 3.5% yesterday. So all those were pretty big numbers. NASDAQ was the biggest. And to be honest, a significant part of the Dow Jones decline we can attribute directly to some of the information technologies holdings that they have on that list of 30 stocks. When I see numbers like this, I know people going up or down. You see a day was up 1,000, day down 1,000. People panic or they think they're elated. And there's a couple things I'm always reminded of. And one is in mid-August of 1983, Jimmy Carter was president. The Fed was trying to do a couple of things to try and get the economy back in shape. We had a lot of problems back in that time period. Inflation was rampant, unemployment. We had a whole lot of issues going on. But I don't remember the exact date. It was mid-August. They came out and they changed the rate a little bit. They lowered it a little bit. And Jimmy Carter came out at the end of the day and he made the statement. He said, for the first time in history, the Dow Jones Industrial Average went up 40 points in one day. Now, to us, it seems insignificant. We do 40 points by 8:30 and 14 seconds sometimes. So 40 points doesn't sound like a big deal to us today. But at that time, the Dow Jones Industrial Average was 800. So to see a 40-point increase in one day was a big day for them. It actually comes out to about 5%. So my point being that while people look at the 807 and they look at the 1,000 points, they look at 500 points, I get looking at the numbers, but my preference is to look at the percentages. So are we up 5%? Are we up 1? Are we down 1? Are we down 5? Where are we? And that's why I brought up the Dow Jones yesterday was down about 2.75%. So the 807 sounds like a huge number. It's not great, but it's still not devastating. The NASDAQ was down, it was down quite a bit, and that was about 5% down. So I always like to look at the percentages to make sure that we keep a focus on where we are and what's happening. And I always remember Jimmy Carter that day saying 40 points. That was a big deal. It was historical. Never been done before. And today, 40 points is the blink of an eye. So let's go on into our charts, Mallory, if we could. We'll start with the Dow Jones and how we're doing. And you're going to see some effect. I actually had to close this file a little bit early yesterday because of the meetings last night. But if you go over here on the far right-hand side, you're going to see our averages. Again, the blue line, which we all know by now is the daily movement. The orange line is a 7-day moving average, and the gray line is the 14-day moving average. So if you look back at the left, you're looking at the early part of this year, and you can see where we were. And as you can now see on the far right-hand side, we've essentially come back to where we were for the year. This week, the Dow was the last one to do it, where we actually went above the high for the year. So we're all back to zero. It's like we've reset the game. We have a tie game in the ninth inning. We're going to play another inning. So now the important part is, as I've said, where we go between now and the election, and then post-election, what happens in that period of time. So you can see we've had some volatility in the blue line, but what's really balancing out is the average daily movement is still going on a positive trend, and that's nice to see. It is a little bit disconcerting because you can see that blue drop on the far right-hand side indicating yesterday's decline. But even with that drop, our moving average is still going up. So not terrible news, not great, but remember, we're not looking at the trees, we're looking at the forest. So we'll see what happens today. It looks to be a quiet day, but you just never know in these times. And as the election draws near, we're probably going to see a lot more days where we're up and down 3 digits. And there's going to be some more volatility, so we need to be prepared for that. The next chart is kind of going to tie in. This is a 90-day view. And what I'm trying to do is see more. Let's kind of set aside the big drop we had in March and see what we've done to recover. And you can see that, this is a nice steady ride, and it's something we really like to see. And again, you see this big blue drop on the far right-hand side, which indicates yesterday. But you have the silver line, which is 14-day moving, and you have the red line, which is 7-day moving average. And those are still kind of on an upward trend, a little bit of a bump from yesterday. We'll see what happens. But long term, we're going back to way back here into July when they started turning upwards, and we're still going up. So nothing to panic about yet. Always be cautious. But something that we like to see is a nice, easy trend. And Mallory, if we could go to the next one, please. This is our market movement since COVID. And again, I closed the US indices a little bit early yesterday. But what you're seeing is a decline over the previous week on almost every market. The odd part to me was Japan. As you know, the Prime Minister resigned a week ago today. So I kind of expected that to go down a little bit. He's been in office quite a while. He's added stability to the market. So we'll just have to see what happens. There still isn't a successor that we're confident is being named. There's some other names being thrown out. It's not official yet, and it won't be official till the emperor gets involved. But to see that was the biggest movement this week was a little bit of a surprise to me. But again, I see that as positive. So it would be almost like our president being replaced. There would be some instability. So it's neat to see that. And then you're looking at some of the, obviously UK is down 1.7, and our NASDAQ got hit hard this week, down 2.6%. So this is our trend, and we're still down versus our beginning of the year. We're kind of flat. I'm sorry, we are up since the that middle point here, and these were pretty big numbers. So to see us, trending back to that's pretty good. So it's still nothing to panic about yet. It's just time to step back and be kind of observant on what we're saying. Next slide, please, Mallory. This is our recovery chart year to date. That NASDAQ number does not include yesterday. So it's a heavy number, and it's not bad. It's not a terrible year. So we'll keep seeing that going. Again, last quarter, I think, is going to be a really, really big deal. Next chart, Mallory, and we'll get into, we're going to get into the jobless claims. The jobless claims that were filed a week ago were 881,000. Most of the economists were predicting 1 million. We didn't see that, so that's good news. And you'll see on this one, the red line is the moving average. That moving average is still trending ever so gently downward. That's nice to see. We had that really big hit, which is going to skew any statistics. The blue line continuing to go down at a nice even rate. That's nice to see. So what we'll be looking at is how we go through the next 2 months. But then the important part is going to be what happens when winter hits. What happens when, for instance, restaurants, which are going to be a big deal, when restaurants can't serve outdoors anymore, and when airline bookings begin to drop and travel stops, and And then the other part is school. What's going to happen? Can we prevent COVID from not closing the schools down and not shutting down businesses again? So this is kind of a tenuous number. We'll see if it continues on that downward track. For right now, we're comfortable, but here we're also looking at, we're prepared to start going a little bit more cash in preparation for late October, early November. And Mallory, the last slide, please. This is our treasury yields. Remember, what we want here is a nice spread between the 10-year and the 2-year. The 2-year is blue, the 10-year is orange. And what you never want to see is what you see back in July, where we see that inverted number, where being in for 10 years was actually less rewarding than being in for 2. So we're seeing over here on the far right-hand side a nice spread. I love seeing that. That means that if you're in for the long term, you're getting rewarded a little more. I wish that number was 3/4 of the way up the chart right now, but it's not. So the point being that the spread is nice to see, and now it's a matter of working toward it. Now, you remember last week what we talked about is the FOMC has made it clear that their goal is a 2% inflation rate. If they manage that properly, and that's part of their job, then we'll see this blue and the red number both start to creep upwards. And our goal is to see those numbers be higher than they are on the far left in 8 to 12 months. So what we're dependent on is how COVID is managed. Can we see a vaccine, and when will we see it? The part of the problem with the market this week was there was a rumor that we were going to see a vaccine by November. And what sparked that was the government put out a request, and they said states need to get ready for distribution. That was misinterpreted on a lot of levels. All they're saying is get ready, and that was preparatory. It was a good decision. It wasn't saying we have a vaccine ready. So what we need to do is stand back and wait until we see the testing come in that we have a vaccine. Will we see it before the election? Probably not. Will we see it the first quarter? Probably that's when we'll see it. And that's what we'll be watching for. So here we head to election season. Your phones are going to start ringing, and be a lot of surveys going on. We're going to see a lot of visits through all of our home areas for people wanting their vote. And we've got to be careful of how we vote and the mail-in vote, and see when that's going to be counted. So there's some tenuous things coming up. We'll watch today to see what happens. We're expecting a quiet day. Labor Day is coming up Monday. Markets closed, and that's kind of good. Maybe we'll see a little bit of a breather. And then we'll get back to it next week. It's going to get a little hectic, and we'll be watching the market for you. And we'll be back 1 week from today talking to you about market insights. If you have any questions, please feel free to mail them in. Mallory's working behind the scenes still, behind our great big blue First Option Bank producer curtain. So if you have a question, send it to me, MMCCAULEY at First Option Bank, or mvaughn at First Option Bank, or give us a call, 913-259-2110. And remember, this is commercial free and political free. So tell your friends to join us, and we'll be happy to see their names on the screen. In the meantime, have a great weekend. Enjoy your holiday. Thanks for joining us, and we'll see you 1 week from today.